What's up, everybody? Welcome back to Trades and Gains, your favorite place for decoding Wall Street with zero jargon, maximum sass, and just enough caffeine to survive a Fed meeting. I'm your host, Max Pitts, and today we've got two hot pieces of data fresh off the economic grill: ADP Payrolls and Q2 GDP print. Translation, we're talking about jobs, paychecks, and whether this economy is cruising, coasting, or headed for a crash. So grab your coffee, your cat, or your cry pillow, depending on how your portfolio is doing, because we're diving in. Let's go, Lesbos. All right, first up, ADP Payrolls, aka the appetizer before the main jobs report drops from the BLS on Friday. So watch out for that. Think of this like the economic version of checking your steps before the marathon. So what did we see here? The headline number was the private sector added 104,000 jobs in July. Not bad, but not great. Kind of like when your DoorDash order is right, but the fries are soggy and cold. Let's break it down like we're splitting a bill at a bougie brunch. The winners: leisure and hospitality up 46,000. Everyone's apparently still out partying, sipping overpriced cocktails, and posting about self-care on Instagram. Construction up 15,000, building stuff again. Maybe they're all working on new AI server farms. And financial activities up 28,000. Bank bros are back, bro. Yeah, let's go get some dirty martinis and go hit on our assistants, right? Must be all that refinancing action, though. Let's be honest, folks. Now, our losers: education and health down 38,000. Wait, what? Aren't we supposed to be caring for minds and bodies? Apparently, they're ghosting the job market harder than your hinge match that you just talked to last week. Regionally, the West Coast crushed some serious butt this week, up 75,000. Pacific plus mountain folks are working and probably hiking after. The Northeast, not so hot. They lost 18,000 jobs. Too much rain, too many bagels. I mean, they're weird up there, so who really knows? Now, by the size of big biz, we saw 500 plus employees. That's 46,000 jobs added. They're hiring again. Shocker. When you have cash reserves and a PR team, who thought you would hire some people? Small businesses, 1 to 19 employees, added 22,000. Your local donut shop might be hiring again. Make sure to support those small businesses, folks. And pay insight time. Yep. Wage growth for jobs stayers is 4.4%. Job changers, 7%. So if you switched jobs recently, thumbs up to you. You probably just got a raise and a welcome Slack channel shout out. But hold up, that 4.4% wage growth, it's been flat for 4 months now, like your gym gains when you skip leg day. Bottom line on ADP: economy's chugging along, not sprinting. Services, doing okay. Healthcare and education weakness is a weird red flag, and wage growth has cooled, which equals less pressure on inflation, which equals Powell might actually chill. This is also mildly bullish. Now, the next thing we're going to talk about is GDP, the big kahuna, the economic pulse check. And guess what? Q2 GDP came in hot at 3%. That's way above the 2.6% forecast from Bloomberg's squad of coffee-fueled economists after Q1's womp womp of down 0.5%. This is a solid rebound. So why did Q1 suck again? Well, tariffs, Trump, Liberation Day, tariffs kicked in, and importers panic bought everything like it was toilet paper in 2020. The Q2 rebound happened because fewer imports equals GDP math gets a boost. Imports subtract from GDP. Yeah, I know. It's weird. Doesn't make sense to me either. Services and consumer spending are still holding up. Americans are still spending money despite these uncertain times. And then we also have not getting too excited here. A deeper dive and stat shows that sales to private domestic purchases only grew 1.2% in Q2. That's the slowest pace since 2022. That's like saying your paycheck went up, but your rent, groceries, and Netflix premium also all doubled. Net gain, man, it's not great there. Also worth noting, oil prices dropped post Liberation Day, which dragged on growth. Apparently, even crude oil needed a vacation. Now, what does this mean? No recession for now. The economy dodged the L. But it's not fireworks and Lambos either. It's steady Uber ride with occasional potholes. The Fed's probably watching these numbers like a hawk in a Starbucks, alert, jumpy, but not making any sudden moves yet. So here's the long of the short of it. If your attention span is fried and you are just waiting to get back to your Roblox game, ADP jobs report up 104K jobs, wages up 4.4% for job stayers, up 7% for job hoppers. Healthcare lost jobs, weird. West is best, Northeast completely flopped. GDP 3% growth, strong rebound. Uh, but underlying strength is only 1.2% growth in domestic sales. Still no recession, but no champagne corks popping either. So what's next? Friday, we get the official jobs report, non-farm payrolls. Fed's watching inflation and wages closely. Tariffs are still in play, and this could mess with Q3, and the market could probably stay choppy while everyone plays data roulette. All right, so that's a wrap on today's economic deep dive, served up with some sarcasm, stats, and some spicy metaphors. If you learned something, laughed a little, or just want more breakdowns with an econ degree, without the econ degree in this case, smash that like button like it's a buy the dip moment. Comment below. Are we heading into a soft landing, a hard landing, or just circling the economic airport waiting for clearance? Don't forget to hit subscribe. We've got more market news and moves coming for you. Fed talk breakdowns and hot takes coming your way every day. Till next time, keep your trades tight and your buttholes tighter and your coffee stronger than your dollar. See you in the next one. Peace.